Hi, this is Atticus Analysis, and today I wanted to talk about Ocular Therapeutix. That's ticker OCUL. First, I want to talk a little bit about what this company is all about. They are a late stage development biotech company that is focusing on wet AMD, or macular degeneration. They also are focusing on other retina health issues related to diabetes, things like that. And this is a market that is rapidly growing because of aging population. Now, talking about the total addressable market here, this is actually something that is important. It's one of the things that I like to look for is a company that has a growing total addressable market. That's because when analysts are doing their expectations, I want there to be some catalyst that encourages them to increase those expectations, as things move forward. Some people will do their expectations based on what the market is, and some people will do their expectations based on what the market is likely to be. And if the market is genuinely growing, then that's going to be just another driver for analysts raising their expectations as time goes on. Uh, so as you can see here, that the market has changed pretty quickly for this disease. It looks like it's about 15 billion. And there is a new player, Fabsimo, which went from nothing to about 4.4 billion a year in sales very, very quickly. And that was based on a very small incremental increase over the competition. Um, it was lasting 2 months per injection instead of 45 days, basically. So, from just a 2 week improvement, they managed to capture a very large amount in just 3 years. Axpaxli, which is Ocular Therapeutix treatment, is on track to have a superiority label on last up to 12 months and have much better long term outcomes. So, beginning getting an injection once a year instead of 6 times a year is obviously huge. And this is a good thing for patients, doctors, and insurers. It's better for patients because it's more convenient for them. Um, Getting to the doctor's office can obviously be a struggle if you have eye problems, you're not able to drive. It's better for doctors because they can not only have confidence that their patients are going to have better outcomes, but also they're going to see a larger number of patients. And it's better for insurers because insurers are going to be more interested in covering a treatment where you only have to visit the doctor's office once instead of 6 times a year. It's also important to know that they're not just going to be the beneficiaries of the market growing organically. They're going to be the beneficiaries of potentially increasing the market for wet AMD. So when I say that, 40% of patients actually discontinue treatment within the first year. And that's because going again 6 times a year is really, really difficult. People just don't want to do it. And all of these patients will eventually go blind from their macular degeneration. So it's a huge cost, but it's difficult for patients to keep up such an extensive treatment cycle. So what you're going to see here is potentially the total addressable market not just expanding thanks to an aging population, but you could also have more people staying on treatment because they have a treatment schedule that actually works for them. So this drug isn't just the beneficiary of an expanding market. Because the treatment is more convenient, it could actually be expanding the market all on its own. And then the diabetes related one, NPDR, only 1% of patients are currently in treatment right now. Again, that's because it's a difficult treatment schedule and also because it's not clear that there is efficacy. They are running a study trying to prove that there is efficacy here. So that would obviously be a huge population if it was being treated. Now, one of the things that's happening here is when you have these drugs that you have to get an injection into your eye 6 times a year, and there's many companies trying to do that. There's a lot of competition. There's generics coming onto the marketplace for some of these. So what that means is that, as the CEO mentioned, there's a race to the bottom here for pricing. It's just not great, and the race to the bottom has a couple of effects. Obviously, it lowers the price, but you also see a change in the way ROI works for these companies. So let's just say, for example, you're a company. and you are in the middle of this race to the bottom. You see that there's new generics coming online, and it's just not worth it with all this competition, all these generics, to sell your drug at such a small amount of money. If you spend the money on the advertisements, you're not going to get much back because the sales per unit are low and there's a lot of competition, and you're not clearly better than the competition. Well, what's the logical thing to do in that instance? It's to pull back on advertising, right? Because the advertisement no longer makes sense anymore. And so what you have is you have a competitive situation which is actually uniquely suited to be disrupted here by Ocular Therapeutix, right? If you have a competitive situation where, thanks to generics, the second tier quality drugs are not worth advertising, you could have a situation where if Ocular or some company, larger company that bought Ocular, was able to start doing significant advertisement for their superior product, they wouldn't necessarily have any well funded competition, even though the space itself is very competitive, because again, the situation exists right now. It's not really worth it for a company that's a second tier treatment to do advertising in the first place. So that's just another situation where if they're able to prove superiority to the existing treatments, they could kind of be in a class in themselves in terms of the advertising game. Now, this is designed to be immediately adopted. Um, you just inject it into your eye, just like the other injections are injected into your eye. Favorable safety profile. There's no surgery required, no steroids required. It's easy. Now, one of the things they talked about was they talked about the study that they're doing for this, and they went in great detail about this during their Investor Day presentation. That's actually where I'm getting most of this information from about Ocular Therapeutix. It's from their 2.5 hour Investor Day presentation. I listened to the entire thing so that you don't have to. So one of the things that they talked about was, if you look at the primary endpoint and the top line readout, um, because of the way this was designed, and this is all designed because essentially the FDA told them to design them this way, they have a few things that are kind of giving them confidence. The first thing they said was that in the past, when you have something that's complicated like an injection or something, you could try to do a placebo controlled trial against what they called a sham injection. And they've done that in some cases, right? With some of the early stage trials, or other companies have done this, where you inject something like saline or water into somebody's eye instead of actual medication for the sake of creating a placebo group. But they didn't do this. Instead, they injected a competitor's drug into their eye for the placebo group. So this shows not just that the company's treatment is effective, it's going to show that it is more effective than the competitor. Also, because of the way the top line readout works, um, and the fact that this is a yearly schedule instead of every 2 months, the competitor's drug is effectively not going to be in full strength. They said, doctors will inject it into somebody's eye. 2 days later, it feels like it's a miracle, but then it just slowly fades and gets worse and worse and worse and worse. It does not last. Axpaxli is not like that because it's a gel that's designed to stay in somebody's eye and continue to have benefits for the entire year, potentially. So, because of the way that the top line readout and the primary endpoint is measured, they believe that their odds of showing, a strength over the competitor is extremely high. There is no reason to suspect that this trial has any problems. There is no rescue events that define the protocols of the study. So, in other words, nobody had to have a situation where they needed emergent treatment that was outside of what they expected. Despite the fact that 40% of patients drop out of standard of care treatment, 95% of patients who were in the trial have stayed in the trial. And there is nothing unexpected to note that they had to disclose, which is very important because you've had some high-profile drugs have to do that recently. So yeah, there's absolutely no reason to assume that there's any problems with this trial. You can also look at the other trial that they have going on in terms of I think this is the one that they have for the diabetes one, and you can actually see right here how the drug works. I think this was their phase 1 trial that they did. Um, you can see the leakage in somebody's eye actually going away, and in the sham, where they just injected them with saline solution, uh, it actually got significantly worse. Now, another thing you can consider for the one that they have in diabetes is, what is the chances that someone will develop some sort of significant eye-related condition, like their cornea detaching or internal bleeding, etc., etc. Once again, you can see right here that in the phase 1 study that they did, a huge number of the patients that were on the placebo did develop a serious condition versus none of the patients on the drug developed a serious condition. Okay, now I want to take a step back and I want to talk about a case study from earlier this year. For a stock that I invested, it was my number one holding in the beginning of the year, TG Therapeutix. And I'm talking about this because I'm going to transition now to talking about valuation and sales numbers. And I want to explain what I mean when I say a stock must exceed expectations to outperform. So back in January 21, I published an article on Seeking Alpha called TG Therapeutix 2025 Revenues Will Smash Expectations. And I parsed management commentary as well as the past year of sales reports to see exactly what I thought 2025 would look like. And my fairly complicated calculation said that it would reach 605 million for 2025. Well, today, the analyst expectation is now that, the year's almost over, it's going to achieve 606 million. So I calculated correctly the revenues of TG Therapeutix with a margin of error of less than 0.5%. Now you might say, well, that must be, great job. TG Therapeutix must have had a great year. It did not. In fact, the stock's price is down on a 1-year basis, 8.5%. So you can see here that I published my article when TG Therapeutix was $29 a share. Shortly after that, the company issued its Q4 earnings report, and analyst expectations quickly rose. It's important to note that analyst expectations formally rose shortly after the stock spiked. So you can see that firms were buying in advance of issuing their coverage. So what you really want to do is you want to buy before analysts raise their price targets, because of course they're not going to raise their price targets before the firm has bought all the stock that they want to buy. You want to buy in the zone where the good news is clear, but analysts haven't caught up to reality yet. The firm hasn't finished buying. That's when you want to buy. Now, later, when the Q1 report was released, the numbers weren't terrible, but I knew that the numbers were no longer exceeding the internal expectations that I had. They were not projecting growth that was going to be higher than my 605 million. So because of that, I sold almost all of my stock, and I sold it at just about 5% off the top of the year. And again, you cannot have high performance if you do not have stocks that are, going to have their expectations go up. So with that in mind, I'm now going to talk about what are the expectations for Ocular Therapeutix. Now, the single most optimistic analyst is Piper Sandler, who recently updated their target to 31 from 21. 21 would have been tied for the street high. So obviously extremely bullish on this company. They had a private investor dinner, which I also listened to, which they talked about all the different confidence that they had in this stock. But they are saying that they think peak sales are going to be 3.2 billion, which is actually not that much. It really isn't. It is not a lot compared to the numbers that we were talking about in the earlier part of this presentation. So again, let's go back to Vabsimo. How much did they accomplish? They did 4.4 billion, and they did that with a marginal improvement in durability and potentially side effects, And already that is much more than what Piper Sandler is estimating. And this isn't even peak sales. This is just 3 years in. It may end up being peak sales, but this is just 3 years. And this is without the diabetes. This is without estimating organic growth in the total addressable market. And this is without the inorganic growth of the total addressable market that I mentioned at the beginning of this video that would be the result of people actually staying on treatment and not 40% dropping out in year one. So the question now is, do I have confidence that Axpaxli can actually have 1/3 or greater of the total addressable market within 3 years? And the answer to that is yes, because when you actually talk to key opinion leaders and physicians, most of them say that if this drug really is a superior choice and it requires only being injected every 6 months or every year instead of 6 times a year, um, then the the KOLs are going to say, yeah, more than 50% of their patients would be on it. Some suggested 80% of their patients. Again, to go back to the previous slide, uh, I was comparing this to a drug that only had 1/3 of the market, or a little less than that actually, and none of the diabetes or anything else. So the idea that this company would be able to get more than 1/3 would be a huge increase. It would increase things to $61 a share if you're valuing it at peak sales times 3 instead of $31 a share, which is what Piper Sandler said. Now, the last thing I wanted to talk about was that the company issued a report at the very end of the day on Friday, which said that they were going to apply for FDA approval at the conclusion of the study that they're doing right now, which is going to be reading out in the first quarter of 2026. Normally, for eye-related treatments, the FDA requires 2 different studies. Now, I have no idea why the FDA would do that. Most drug categories, for most disease categories, do not require 2 different studies, but that has been the standard for the FDA. But the company said that they spoke with the FDA recently after there was a big speech that they made about 4 days ago saying that they wanted to change this rule, and the FDA told them that they are going to apply based on 1 year data from their phase 3 trial without waiting for any additional data. Now, this effectively moves up the drug's approval and commercial launch by 15 months. Now, just as an aside, before I get into what that means, this drug has actually been approved before. There's no reason to think that there's any weird surprise going on. This drug has actually been approved before for the treatment of inflammation and pink eye, which obviously is not nearly as big of a market as this. But yeah, this is a new delivery system. This is a new indication. But this is a tried and true drug. Now, why does 15 months matter so much? Well, first of all, most of the time when people do these analysis, they'll do some sort of discounted cash flow where they'll look at what the value of the company is and then they'll subtract 10 to 15% per year to kind of compensate for it as if you were investing in some sort of like very, very high yield bond and say, oh, well, the value of this is 10 billion, but because you have to wait 5 years to get there, start with some lower number and compound it by 10 to 15% to get to that number later. I don't particularly like doing that because that's not really how investing works. You don't, decide whether you're going to invest in something based on whether it outperforms a high yield bond. It doesn't really make sense as a comparison. So I don't understand why this is so popular, but it doesn't matter what I think of it. I prefer to take like what I think is the valuation that the company will have at its maturity and cut that number in half and then say that's what I think is a reasonable number, and then just let the chips fall where they may on the how many years it will take to get there. I don't think it's very important if it's going to take 3 years to get there or it's going to take 5 years to get there. It's more important how big is the number, from the midpoint between there. In other words, if we're already at the midpoint, then the stock's kind of expensive. If we're very far away from the midpoint, it's a cheap stock. That's how I tend to look at it. But it doesn't matter what I think. What matters is what analysts think, and a lot of analysts will do this. And so just right off the bat, moving up uh, the commercial timeline by 15 months immediately adds 10 to 15% value to the company overall, because you're no longer having the discounted cash flow by another year. You're getting rid of that. It also cuts costs, because you're not, paying the management to sit around wait, basically, and it shrinks the competitive landscape. So this is better than anything in development. But is it going to be better than anything in development 2 years from now? I don't know. It's possible 2 years from now there will be something that's better in development, and the company's valuation will, have their future peak sales or whatever shrunk in anticipation that they will be disrupted by the next generation of things at some point in the future. But if these guys can launch, um, maybe a year from now, there is no threat of anything competitive that's going to disrupt them. So, for all those reasons, I can totally understand why, after the company issued this report late on Friday afternoon, the after hours trading showed the stock up by 10%. I don't know if you're listening to this after Monday, but I am expecting the stock to be up at least 10% on Monday. It's possible that we'll have a sell off. Maybe the overall market will be red or something like that. I don't know. But yeah, I definitely think that the 10% increase is justified. It should be up at least that amount, possibly higher. Maybe 15% is more fair. Um, but yes, this is an incredible development. I didn't even mention that, not requiring two trials just means that there's less of a chance something can go wrong with the first trial. But yeah, um, I feel like I've just scratched the surface with this one. The opportunity is obviously really massive. Uh, and yeah, just to summarize, the trials are de-risked because of the way they're designed. The opportunity is massive and growing. The way this company's drugs exist is going to expand the market, in addition to the fact that it's already expanding on its own. And I think best of all, the people that like this company are not anticipating that it will have blockbuster success. They are not anticipating that. Even the most bullish analysts are anticipating peak sales well below what other drugs are doing right now. So, because of all those reasons, I think it would be very easy for them, if the phase 3 trial was a massive success, for this to be perceived as the next big standard of care. Or alternatively, just for speculators to get overly excited in Q1 and for the stock to run up massively in anticipation of that announcement, which definitely could also happen. And it's possible that the trial itself concluding won't even necessarily move the stock up that much. If the stock runs up to $30 in anticipation of the trial results, I'll probably would sell most of it at that point. I'm not going to say I'm going to hold this stock forever. I'm going to, respond to the price action as it occurs. But yeah, I anticipate either there'll be a massive run up into the results, or following the results there'll be a massive run up then, because uh, nobody's expecting these people to do what they say they're going to do, and there's no real reason for me to doubt them. So that's it. Thank you so much.